Welcome to the 5-minute weekly preview from the Traders Club. Today I am going to be focusing primarily on the Australian dollar, so the Aussie USD pair. Now, what is exciting about this? Now, the Aussie is on a rally, so if you're looking at the chart right now, you can basically see that we're on a rally. Right now, I'm expecting that obviously we came down, we hit the trend line. Fair enough. Now, I'm expecting that we after this bounce, we're probably going to rally up into structure high. So I reckon the traders are going to be looking to play the structure. So they're going to look for the market to rally and then bounce and then look to side. Right? And we see that on the daily chart. So I'm thinking 75 cents is a good time to be short the Australian dollar. Now I do think this is a big rally. Right? So I do think we've seen in what looks like an AB equals CD kind of movement, and now we're rallying out of it. So there's a very good chance we're going to catch here. Right, and I think this presents the ultimate bracket. So we have to see if we're going to rally out of 75.60. So I think 75 cents is kind of good to sell, and obviously if we start trading back into the value zone, then it's likely we're going to continue trading up, perhaps back to 80 cents. Right, so it's a really interesting time for the Aussie. Now, if we double back and we just run into the weekly frame for a second here, we can also see now the weekly trend line is holding this market short. So we started to rally. We're not rallying out of any significant levels here. So there's a good chance, again, we're seeing on the weekly chart that playing at 75 cents. Okay, so the guys who obviously on the weekly chart, we should get a good enough bounce, and then we've got some trend line support here as well to the upside. All right, so if we're looking at this this sort of chart at the moment, again, the risk comes if we trade above and we start trading this area comfortably without any rejection, then a break of the structure could push us back up to the 80-cent mark. Right, but from my point of view, I think, you know, if we're looking at call to play here, we want to be staying short Aussie dollar. So despite the rally, which I think is going to be temporary, we should be looking at short positions on Aussie dollar as soon as an opportunity presents itself. So it is critical. So I think the big play coming out of this the next couple of weeks will be in the Aussie dollar. So that's one to pay attention to. Now, if I double back again into the monthly chart, what we've got here again is we've got some overlapping balance areas, and look where we're trading now. So if you were trading the monthly, so this is the reason why, guys, we've got to look through time frames. So imagine that you'd seen this break of structure. So we had a pretty decent trend line, and we broke structure. Right. So right at this point, the market starts to roll lower. So you could have been short this market for 1, 2, 3, 4, 5, 6, 7, 8 months, and before we start to see any kind of balance. So we've had a steady 8-month decline, and now 9, 10, 11, 12. So pretty much almost a year's worth of a decline on the Aussie dollar. So this was a great shorting opportunity. So we're reaching that point where I think at 70 cents, the down move will be exhausted. So the key is, do we break 70 cents and then eventually start trading down here? So I don't think so. So I'm going to hold my horses for 70 cents. There's a lot of structure here, especially on this side. So 70 cents is a good place to look for a reaction. So 70.60 is quite a key level. So if we're looking at the Aussie dollar, that's the setup. I mean, the risk comes obviously if we rally. Again, if we're looking at that structure, we can see that 75 is crucial here, even on the 78 Fibonacci, for shorts to come back into the game. So that's a key level. So again, even if you're intraday trading, you'd want to be looking at that level. All right, so again, if we start to break, again, we've got that 80 cent on the 61.8 on the Fibonacci expansion. So you've got that 80 cent mark again, obviously staring us at. So there's some good opportunities to play this back to the downside. I genuinely don't think at this stage we're going to see the Aussie rally. But again, if we're looking for the long opportunities, at this point in time, you know, if we want to be long, stop's got to be under here somewhere, because that will be a key level. So we have to be able to give about 1,000 pips worth of stop on the monthly chart if we really want to take this play. So 70 cents is not a bad idea to buy into the rally. We're already rallying near enough. The key is, you know, can we engulf this? You know, can we really take this trade through the end of the month and actually cover the entire bearish movement? Which probably will say at this point that we might have another month or two of Australian dollar rally. So again, this is some of the key plays that are sort of existing right now on the charts. But I just wanted to give you guys a good our opinion. So we are on the long term. We think the Aussie dollar's got somewhere to go in the 70 cents on the short side. In the short to medium term, it's a good play on the rally, but just look for opportunities to short around about 75 cents or possibly 80 cents if the rally extends. This was another great 5-minute preview. Hopefully you guys take advantage of the opportunity. Catch you later.